So what I'd like you to do is go to the balance sheet and ratios tab, and I'd like you to download it. And while we're doing this problem, I'd like you to do your own.
Do their own balance sheet?
Do your own balance sheet.
Well, it's hard for them to do that right
now.
Yeah,
let's do it. Well,
let's
do it together.
We're going to do it for Steve and Mary Jo first.
Okay.
But also remember that when your SIE plan is due in 2 weeks with your cover page and your SIE plan, also you're going to do a balance sheet for January. So, and it'll probably take you 5 minutes or less to do your own balance sheet. You just have to list your assets and list your liabilities, and we'll help you do that. But we're going to do one for Mary Jo and whatever the other guy's name is.
Steve and Mary Jo.
Steve and Mary Jo first.
So let's just talk a little bit about what this looks like. Can I get a volunteer to come up here? Okay. Yes, Sven, would you come up, please? So the first thing Yeswen is going to do is she's going to put her name here in Q3.
Or you can just do Steve and Mary Jo.
No, you can just put your name there.
I'll put your name there, whatever.
Okay, notice what happens there too. It actually puts her name at the top.
So remember, you only put things in the green.
Okay, and now a balance sheet is as a point in time. So if you can come over to your January, it's a drop-down box.
And then
click. So today is the 24th, so click on, you can type it in or you can use the drop-down box. And then 2025.
go.
Okay, so now she's got her name and her date. So let's assume that she's Steve and Mary Jo. Okay, so let's follow that information.
So they have a yearly income of $50,000.
And we're going to actually do this problem. She's going to do it there.
So they don't put their income because that's not an asset or a liability. That's
so the
just
good
their
news,
income.
If there's no place on it for income, then you know that's not something you put here.
But
where do you put income?
On their income statement.
On your income statement, and it's also on your budget too. Go ahead.
Okay. So they own a house worth $150,000. So right here, yeah, right, 150 on the one up.
So in other words, there's two parts to the house. It's what it's worth, that's the appraised value, and the other thing is what you owe on it.
Okay. And they have monetary assets for $5,000, so probably in their savings account. Monetary assets right there, $5,000 up there, yeah. Only in the green, remember, only in the green. Okay? They have two cars worth $20,000 total. $20,000, okay? And then they have furniture worth $10,000, so personal property maybe, $10,000. And their house has a $100,000 mortgage on it. So over here, under liabilities, their house has a $100,000 mortgage. And they have college loans for $10,000 outstanding. $10,000.
Come down to other loans, student loans.
Oh, sorry. Down there, yeah.
115.
10,000. Student loans for 10,000. And then their cars have outstanding loans for 10,000 each. So they have two cars, so it's $20,000 outstanding loans on their cars. Yeah, 20,000. Yeah, right there. Yeah, 20,000. Okay, and then they have bills. Let's see, bills totaling $1,150 for the month have not been paid. So that's on their credit card. So $1,150. Yeah, right there.
So here's the question.
Unpaid, $1,150.
If they paid their credit card bill yesterday, how much would they owe on their credit cards?
Zero.
On the balance sheet, zero because they paid it off yesterday.
But they owe $1,100. Okay.
So.
And then they are requesting help. Okay, so that's it. That's all.
So what do you think? How are they doing? Yes, when are these guys doing pretty good or not so good?
So here's their liquid assets are $53,000. But where did they get that $53,000 from?
Yeah. So
Do you guys know?
let's talk about how is this couple doing?
you
They're
can-
35. Yes, one, thank you. They're 35 years old,
So they've been out of college for 10 years.
out of college for 10 years. How is this couple doing? Yeah, not pretty. Where is most of their... yeah,
50,000.
in the house.
Yep.
Most of it's from the house.
And so they still owe most of it.
Yeah.
And so it'd be hard for them to get that 50,000 out.
Without
They'd have
selling
to sell
the house.
it.
They'd have to sell the house. So, but it does give you a sense. So let's...
You gonna do this?
Yeah, I'm going to talk just for a minute. And then...
Okay.
So we created that balance sheet. 185,000 liabilities, 131 net worth is 53,850. So even though it seems like they've done that, most of that has come from housing. Is housing a conscious choice on those, or is that something more? Well, maybe they were wise in the pick of the house.
And they owe exactly what their automobiles are worth. So their automobiles are each worth 10, and they owe 10 on each of them.
Yeah.
So that's not good.
And so here's what it looks like. Okay, let's talk about an income statement. So tell me what the income statement does. So, well, what does an income statement do?
Statement for your income.
A statement of your income. It's a point in time, or it's a historical thing. It's your income over the last month or the last year. So an income statement is backward looking. This says, what did we spend?
Or what did you make?
Yeah, what did you, yeah, make or what
Make
did you
or spend.
Make and spend both.
Okay.
So it's on a cash basis. Second column on your SIE budget, and it is, wages, tips, royalties, salaries, commission. I work students. What's their income? So they get paid if they work 19 hours, they get $14 an hour. So their income is their hours times the amount they work. The school then takes out money for room and board. School takes out money for food. And then they leave. You still have more money there, but you still have to pay your tuition at the end of the semester. But what is the income? Is it the income after you receive all of those things, or is your income what you actually earned?
Your income's what you actually
What
earn.
you actually earned. So 2 types of expenses, we talked about those. In our budget, we actually separated it out for you to make it easy. Fixed expenses, you don't directly control those. You have to pay your rent. You have to pay your cell phone bill. You have to pay your tuition. And then your variable are ones that you can control: food, entertainment, clothing. Now, you still have to eat, you still have to survive, but you have a degree of control over those. So let's build an income statement. So the income statement here is just that second column there. So we say this, we're going to pretend, it says January, but we're going to pretend this is an annual budget.
Okay.
So let's help her put this together. So this is an annual budget.
So Steve and Mary Jo made $50,000 that year. So 50,000.
So remember, everything goes on the right-hand side. Each of these is an individual expense. Normally that would be 12 months.
Okay.
But we just kind of summarize
Their
those.
taxes were $7,500 for the year. So taxes, yeah, right there.
And because they know
$7,500.
what they paid in taxes last year,
Okay. They contributed 12% of their total income to charity, so $6,000 to charity. So that's paying the Lord, right here, $6,000. They paid themselves 10%, which is $5,000. So pay themselves $5,000. Yep. And then they have expenses. So the mortgage was $77,730. And their loan was $7,410 for their student loan, okay? And then they paid...
this is their actual. This is not their budget. This is their actual. Did they actually save their 10%? Yeah, they did.
But they spent every little penny.
Yeah.
But they did save 10%.
Yeah, they saved 10%. So again, you'll have a whole bunch of things over here, and then this just sums it up.
So when it shows you your percentages at the bottom, so like it'll show you whether you went over or under and how much, what your savings percent was. It'll show you on the thing.
And if you had a little bit, if you spent less than you earned, this would be remaining income. It would have something there. But in this case,
She spent exactly the same.
Okay, is it hard to put this together? No. But you notice when you do your budget, you're actually doing a budget and an income statement. And then the difference tells you, okay, how well did you plan? Now, we set it up this way here too, because we're going to do some ratios starting on Monday. So you're going to have to calculate certain ratios. We're going to calculate a debt ratio. We're going to calculate a liquidity ratio.
But your balance sheet automatically does it for you.
Yeah, so we do some stuff.
Yeah.
You're going to have to add a couple of pieces of information.
You don't have to calculate it. You just put in the numbers and it calculates for you.
So this is what it would look like. Okay. Now what I'd like you to do is I'd like you to go and download that balance sheet. Because what we'd like you to do is we're going to take about 10 minutes, and I'm going to have each of you put together
your own balance sheet right now, and then it'll be ready for when we hand it in 2 weeks. So ours is that managing our resources is a skill, and it's a skill that Heavenly Father wants you to develop here and now. We need to be faithful and wise with our finances. If we are faithful and wise, we will inherit all that the Father has.